and welcome to HiWayFX market news for December 24, 2015. Oil declined 0.001 and closed at 37.85. Oil soared over 4% to a one-week high after a report showed U.S. crude inventories declined, easing a supply glut. Crude supplies fell 5.88 million barrels last week, the biggest drop since June, the data showed. U.S. crude oil traded at a premium to Brent for the first time since January on a speculation that the end of 40-year ban on U.S. crude exports may ease the nation's oversupply. The pair is expected to find support at 36.65, and a fall through could take it to the next support level of 35.65. The pair is expected to find first resistance at 38.20, and a rise through could take it to the next resistance level of 38.75. The British pound rose 0.28% to close out 1.4868. On Wednesday, traders were focusing on the UK economy. Third quarter GDP was revised to 0.4% growth from previous 0.5%. The revisions indicate a loss of momentum in an economy that continues to rely heavily on consumers and domestic demand. The combination of the weaker-than-expected readings on both the demand and costs side of the economy increased the odds that the Bank of England would delay liftoff until the second half of 2016, said Dan Hansen and Jamie Murray, analysts at the Bloomberg Intelligence. The pair is expected to find support at 1.4853, and a fall through could take it to the next support level of 1.4829. The pair is expected to find first resistance at 1.4910, and a rise through could take it to the next resistance level of 1.4950. Euro-USD declined 0.44% and closed at 1.0908. On Wednesday, U.S. economic data was released. U.S. consumer sentiment, calculated by the University of Michigan, increased to 92.6 in December 2015, higher than a first reading of 91.8 and hitting its highest level since July this year. Consumers were more optimistic over their current conditions due to low inflation, which bolstered real incomes, while they felt less confident about their future situation. Meanwhile, inflation expectations for the next year decreased slightly. Consumer spending in the U.S. increased 0.3% in November, the most in 3 months. U.S. new home sales were at a seasonally adjusted annual rate of 490,000, up 4.3% from last month, but below market expectations. October sales were revised downwards to 470,000 from 495,000. New orders for U.S. manufactured durable goods were virtually unchanged and rose $0.1 billion in November 2015, following a downwardly revised 2.9% growth in the previous month, as the new orders for transportation equipment increased by 0.4%. Excluding transportation, new orders decreased 0.1%, while excluding defense, orders fell 1.5%. The pair is expected to find support at 1.0873, and a fall through could take it to the next support level of 1.0838. The pair is expected to find first resistance at 1.0980, and a rise through could take it to the next resistance level, 1.1012. The Canadian dollar declined 0.001 to close out 1.3852. The Canadian economy showed no growth in October after contracting 0.5% in the previous month. Gains in mining, quarrying, and oil and gas extraction rose 0.7%, as well as the public sector by 0.2%, where they offset by declines in manufacturing, declining 0.3%, utilities 1.4%, and retail trade minus 0.4%. Retail sales in Canada increased 0.1% month-on-month in October 2015, following downwardly revised 0.4% drop in September and staying way below market expectations of 0.4% growth. The pair is expected to find support at 1.3811, and a fall through could take it to the next support level of 1.3772. The pair is expected to find first resistance at 1.3913, and a rise through could take it to the next resistance level of 1.3976. Before we close today's review, we would like to inform you that on December 25, 2015 and January 1, 2016, trading will be closed due to the celebration of Christmas and New Year. For full schedule updates, please visit www.hiwayfx.com. Also, take into account that due to low liquidity, trading for instruments can be halted or moved to close-only mode. HiWayFX advises clients to avoid holding open positions throughout the holidays or to deposit more funds to maintain an adequate margin in your account. Don't forget to like us on Facebook, following us on Twitter and Instagram, circle us on Google+, and of course, subscribe to our YouTube channel. Thank you for watching and have a good day.